Hello and welcome to Budget 2018, the tax effect. I am Ashwin Mohan, and joining me today are two leading experts from the world of tax who are going to dissect some of the key expectations of India Inc. and its employees as far as the direct tax framework and the direct tax expectations from Arun Jaitley and his A-team are concerned. I'm joined by Ketan Dalal and Sudhir Kapadia. Ketan and Sudhir, always a pleasure chatting up with both of you.
Thank you.
We are a few days away from the budget. This is going to be, in fact, the last budget before we get into the general elections mode. So therefore, before we get down to the nitty-gritties of some of the key direct tax expectations, let's first address a very important aspect, and that is the formation of an 8-member task force that was recently formed back in November, in fact, headed by Arvind Modi, who's a CBDT member. And that 8-member task force has been formed with an intention to come out with recommendations to revamp the direct tax framework. In this backdrop, Ketan, let's start with you. How much flexibility do you think the finance minister has to tinker or make amendments when you already have an existing panel that has been asked to submit its report to the government within 6 months?
So Ashwin, I think two things. First is a sort of broader point, not exactly answering your question. The broader point is that whenever you set up a task force like this, I think it is very important to identify a framework and a mandate for that task force. Because is it, for example, to simplify the law? Is it, for example, to make some substantive changes in the law?
Simplification is one of the
correct, but
points.
I don't think the framework has been very clearly articulated. So that's one point. Second is, we all know what happened to the direct tax code. It can go into limbo, it can go into discussions, and it should go into discussions as you make it this frame, because you are changing the law for 1/7 of the world's humanity, the tax law. So I don't think it can just come like that. Given that, I think, Ashwin, it may take time for this to come. So let's say it takes 2 or 3 years. To my mind, therefore, I think there is flexibility for the finance minister to do what he wants to do in the budget, because some of these things cannot wait till that is done. It has to be addressed, relatively quickly.
All right. So you clearly feel that there is sufficient flexibility left for the finance minister. Sudhir, Ketan thinks that there is sufficient elbow room for Mr. Jaitley.
No, I agree, Ashwin. I think the mandate of this committee is in a way to come out with a new law, as Ketan alluded to. We had the earlier attempt at the direct tax code. So this is a medium-term agenda. I don't think it is an immediate agenda. So you want a new law, you want a simplified law. Obviously, the task of budget making cannot stop. So to answer your question, I don't think that that should come in the way for doing something which the finance minister believes is necessary for the economy at this stage.
So clearly, Ketan and Sudhir, both of you are convinced that Arun Jaitley has sufficient flexibility to come out with substantive changes to the direct tax framework, irrespective of the Arvind Modi-led panel. Now let's look at some of the key expectations that corporate India has from this year's budget. Let's start off with the corporate tax rate. Now, the Modi regime is clear that it tries to adopt international best practices as and when deemed fit. Let's look at some of the rates in some of the other jurisdictions. You have UK, where the rates are likely to go down in a phased manner to 17% and maybe even 15% in the next 2 or 3 years. Then you have US, most recently, which caused a flutter in the tax world. The Trump administration brought it down to 21% from 35%. Then you have Singapore, which applies a tax rate of 17%. Look at 2 other jurisdictions, Vietnam and Thailand, 20%. Now, back home in India, it's an entirely different scenario, because you have the corporate tax rate, you have DDT, you have surcharge and cess. Do you think right now, this budget, Ketan, is the best opportunity for Mr. Jaitley to take a cue from international best practices and slash the corporate tax rate, maybe not in a phased manner, but directly to 25% for a far wider gamut of companies? I know that there was a slight relaxation on this aspect last year, but that applied only to a limited number of companies. Do you think the time has come for him to take the plunge?
Yeah, so I think we are now in 2018, right? In 2015, 8 or 9 months after this government came into power, there was a statement made by the finance minister that there would be a phase out of exemptions and a reduction in corporate tax rate to 25%. Now, except for SEZ, a majority of the exemptions have anyway been phased out.
Right.
People were expecting a gradual phased reduction in tax rates, which has not happened. So that's one, and therefore it should anyway happen, regardless of the international best practices. The second is, on the rate itself, Ashwin, the rate is not 30. It is 35 if you include surcharges and cess, and you have to include because that's what you're paying. So when he says to 25, I suppose he means 25 plus surcharge and cesses. So therefore, it comes to about 29. But even that is not bad, and I think clearly it must reduce from 35 to 29. One more point. You mentioned about 3 or 4, overseas jurisdiction. No, but they are advanced economies, and 2 you mentioned which are emerging economies. But let's look at China. China is 25%, and if your constant comparison is with China, in addition of course to the factors that you said and I articulated, I think there is a clear case to reduce it. Also, I think given the fact that exemptions have gone away, MAT has been causing endless amount of difficulty. So I think you have to look at it holistically. So reduction from 35 to, if not 25, at least 29, and doing away with MAT.
Net, this is the best time for him to do that. Sudhir, do you concur with Ketan? The best opportunity perhaps to slash it to 25%. Of course, we also need to keep in mind that India is a unique jurisdiction wherein surcharge, cess comes in. So therefore, the effective tax rate is not really 30 as Ketan was alluding to.
From India's perspective, there is never a better time, right? There is always a best time. So I think that maybe two points to supplement what Ketan said. See, one is when we talk about the corporate tax rate, it's good to pause and say what is the objective and why these countries, as you mentioned, have gone about reducing, and some very significantly, their corporate tax rates. Now, it is a belief, and time will tell, but it is a belief that the investment which an economy is able to attract is directly proportional to the moderation in the tax rates.
Absolutely.
Because after all, you have to look at after-tax cash flows as an entrepreneur, and you have choices. So there is tax competition, is something which we perhaps now need to accept as a fact of life. Now, once we accept that there is a tax competition, now there are a host of other factors, there are 100 other factors of doing business, right, in any country. But this becomes a substantial. So I think that is one important part, and therefore when we look at the revenues lost, one should not lose sight of the possible revenue gains because of the increase in investments. And that is the first point I would like to just supplement, that let's not look at it in a unilateral manner. And the second point, to your point, I think what could be an opportunity perhaps to do a balancing act is to at least give an option of a lower rate of 25% to all those companies, and here I am saying all companies, not just manufacturing, which is the case which was introduced last year, but all companies. Services is a very big component of the economy, as we know. Give an option and say, okay, in lieu of not claiming any deductions or exemptions, start now and come with a simplified version and say your option, take 25%, no deductions, no exemptions. So that's the best blended way to go ahead with the roadmap which was announced.
So that's an expectation, but what do you really think the FM is likely to do? Bring it down directly to 25%?
No,
again adopt the gradual
What
phased
he's likely
approach?
to do is already in the papers now, so locked up. So
but what are you betting on, Sudhir?
No, I think the option one looks to be a good balancing act, given all the constraints which the finance minister faces. So that can be a fair expectation.
All right, so that's a clear expectation that this time there could be a tax bonanza, if at all. The FM thing.
I don't think I will call it a bonanza. I would not call it a bonanza. I think
considering that we are moving from a very aggressive tax regime to a more reasonable tax regime, that's where you're coming from,
I
right?
think it's an optional tax, lower rate in lieu of deductions and exemptions, which has already been announced.
Correct.
That can be widened for all companies in the economy. That's,
and I think it should also be done, by the way, for LLPs, because you cannot have a situation of an LLP having a higher rate of tax. I think the government is coming from the perspective that LLPs don't bear dividend distribution tax. But I think you have to encourage these kind of entities, because as Sudhir said, a large part of our economy is services, and services are better structured in the form of LLPs, unless of course they are large companies like a software, TCS.
Right, point taken.
Ketan.
In fact, that leads into my next question, which is on the dividend distribution tax. Now, that's become very burdensome for corporates. You have high rates, litigation on disallowance, and hence, the return on capital employed has significantly diminished. So, do you think this time, Ketan, in this budget, there is a strong case for the FM to do away with dividend distribution tax and consider taxing dividend in the hands of shareholders?
So I think here again, let us step back and look at the broader picture. Today we are in 2018, and this, I think, regime, I don't know the exact date, but I think 2005 or 6 we moved to that, right? Now, what has happened is that it started with a 7.5, then it went to a 10, 15, etc., etc. Now it's almost 21. So yes, you are right. So what is happening today is, in reality, the shareholder is already being taxed, because the company which is declaring a dividend, Ashwin, is taking into consideration that it is bearing that and sort of in its mind, so to speak, considering it almost like a withholding.
Right.
Okay. So economically what is happening, they seem to be reducing the dividend paying it, but they can't do it fully because expectations of shareholders are different. So I think there is one point. The second is the reason why we moved to DDT was because the government was finding it difficult to track shareholders. That is no longer the position because the IT backbone is now quite strong. The third issue is that on a cross-border situation, we are not, or rather the foreign investors are not getting credit of this DDT in their home country, which is a very serious loss for them. And India doesn't lose by having them get the credit. That is the third reason. The fourth reason is, as I said, and even the issuer committee mentioned in its report, dividend is economically taxed, but on paper it looks to be exempt. So there is a lot of controversy on, let's say, a borrowing by, let's say, a large company which floats a downstream subsidiary, may not be from borrowings, but you have some borrowing, some own funds, and interest on that is being disallowed. There is a huge amount of litigation. For all these reasons, I think, Ashwin, and the reason which you mentioned as the return on investment, etc., is a very, very important reason.
We'll keep a close eye out on the
I
DDT
think
aspect.
I think the time has come, and maybe you could give some kind of a. By the way, you then need to remove that 10% tax on the HNIs. Obviously, it has to be then integrated into one box.
All right, it's
but
part of the same.
yeah.
So part of the same package.
Absolutely.
So DDT is something that we'll keep a close watch out for. Sudhir, the Sensex has recently kissed 35,000. You know, we are looking at the markets in a bull phase like we've not seen in a long, long time. Do you think the FM can perhaps risk, some would say, dampening the sentiment or the momentum by introducing long-term capital gains tax? You know, this is a issue which comes up every year. This year is no different. What's your take?
So I think the first perhaps parameter here is that what is the objective of any tax measure which one is looking at. If the objective is to say that investors should, be encouraged to increase their holding period because this is long term, and long term it's anybody's guess, why 1 year, why not 2 years, why not 3 years, and we have made unlisted 2 years. My personal view is that tax laws need not be the instrument to encourage or discourage a particular investment behavior. So
Right.
what will you get by making, let's say, instead of 12 months, 24 months? Will it move the needle as far as tax revenue is concerned? Doesn't look like it. So you're only trying to move an investment behavior. So that cannot be the reason. Then you come to the main reason, which is revenue mobilization. So obviously you do collect taxes in a far more certain manner on the securities transaction tax. You have that revenue. If you are moving back to a long-term capital gains tax, what is the incremental revenue you are hoping to collect, and where you are assuming that the level of transactions will remain as they are today?
That's right.
Because you are assuming that behavior will not change, which I
change.
think is also a very nebulous assumption.
So do you expect any changes at all?
So if just to complete, if I look at the figures, at least whatever we could find, and those are dated 2 years ago, the long-term capital gains tax revenue was some 29,000 crore lost revenue is what the paper said. Is it a significant number by itself? Yes.
Yes.
Is it in a relative sense for such a large size of the budget so significant that, to come back to your point, a government of the day would like to risk dampening sentiments? I think the jury is still out. So I think if the revenue mobilization if only the revenue mobilization is significant enough for the government, I think it is worth risking bringing back an LTCG. That's my take.
All right, Ketan, one group says that if LTCG on equities has to be introduced, then securities transaction tax should be abolished. If you look at the revenues, I think the Union Budget 2016-17 estimated about 7,700 crores in STT collections. What do you have to say about this school of thought?
One thing is very clear. If a long-term capital gain is brought back, remember STT is whether you make a profit or loss. So I understand that it is not only on gains, but in a sense it's a replacement. So if long-term capital gains tax is introduced, I think clearly the the STT should go. And I think to Sudhir's point, I think the latest estimate as per the BSE of a potential gain, and as Sudhir said, these are nebulous assumptions because we don't know what people will do, was about 49-50,000 crores. The one additional point I want to make, that if long-term capital gain is introduced, Ashwin, I still think that there must be some exemption for small shareholders to incentivize investment in the capital market. Today we have between CDSL and NSDL, the total demat account is I think 3.2 crores or thereabouts, and there may be many multiples also. So let's say 3 crores. In a country of this size, and I understand that many people do not have the funds.
That's an abysmally low percentage
I
of
think
investors.
so, and
Yeah.
therefore I think the small shareholder exemption in any case should be given. Now whether it's based on income, whether it is based on the quantum of capital gain he makes, or a combination of A and B, but I think that should be made.
Ketan, now let's look at the direct tax framework as far as individuals are concerned. You know, in the earlier segment, you were talking about how the investor population is abysmally low. There's another segment which is abysmally low, which is the number of people who actually pay tax. And maybe that's perhaps due to the manner in which the income tax rate slabs have been framed. If you look at the stats, and this is 2015, 2016, might change a little. Only about 2.05 crore Indians, or 1.7% of the population, pays taxes. And the answer behind that is, and behind this figure is that 90% of Indians do not fall in the tax bracket, as they earn less than 2.5 lakhs a year, and hence they are exempt from paying income tax. Now, last year taxpayers rejoiced because there was a reduction in the slab between 2.5 to 5 lakhs, where there was a reduction to 5% from 10%. Considering this is the last budget before the general elections, do you think the government would be tempted to provide any sort of tax ops for individuals? And on the other hand, how does it deal with the pressure of knowing very well that it has to also move to widen the tax base?
So I think clearly, again, as with every such structural intended change or possible change, one has to look, Ashwin, at the broader picture. The exemption limit today is 2,50,000, and I was just looking up the last 7 years budget. It came in 2011 or 2012. So it's been 5 or 6 years, and if you just add the inflation percentage, you will come to something like 3,25,000, 3,50,000. So I think in any case it needs an increase of the exemption limit for sure.
Right.
And I would actually suggest that there should be some kind of an automatic indexation every 2 years, because then there is not really an increase in the first place. So that's one. So there are so many people, who are making that kind of money, but they are scared because A, they don't know how to comply. Two, there is, yes, undoubtedly there is a resistance to paying tax. And third, there is a fear that if they file a return once, they will be arrested. So I think that whole ease of doing business, friendly, collaborative, that kind of flavor, increase in amount and reduction in the rate must come about. Also, I think we must also, as I said, look at it holistically. There are so many other things that have changed in India in the last 10 years. So you have a very small amount of, let's say, interest on education loan, but what about the loan itself? Housing interest deduction, medical is only 15,000, standard deduction is not. I think the whole package needs to be looked at separately.
But do you expect a significant change in the rate slabs per se?
I think the rate of tax, to my mind, will go down from today it is 35% for incomes at the maximum level, including surcharge and cess. I am expecting it to reduce to 30%. And I'm also, although Niti Aayog has suggested not so, I'm expecting an increase in exemption limits at least to 3, if not 3.5.
Absolutely. I think that's a fair demand. How do you look at this, Sudhir? What do you think the government will do on this front to woo the masses? Because let me reiterate, this is the last budget before the general elections.
So 2 data points, Ashwin. Here. Let's not forget that it was the last year's budget which has introduced for the first time a single-digit rate of 5% for personal taxes, which to my mind for many, many years in India I have not seen such a low rate, albeit up to 5 lakhs of income. And statistically that covers a lot of earning Indians. And read with GST, that is a great incentive for people to come into the tax net. 5% by any stretch of imagination is not a high rate. So my view is in the aftermath of demonetization and GST, there was an expectation of increase in the exemption limit. What the government perhaps wanted to do is not lose the tax base in terms of data points, but have a much lower rate. So that compliance becomes more incentivized, and I think if that philosophy continues, one has to see whether they will still like to raise the exemption limit. One other important point, and alluding to what Ketan said, is with this plethora of complicated, relatively small deductions, there is perhaps a good case to consider a omnibus standard deduction to replace all of this.
All right.
So hopefully the revenue loss may not be significant. But there is just one more point I would like to make here. See, when you look at government accounts, when the figures which are given for personal tax is concerned, you will find that there is a far greater increase in the personal tax collections than on the corporate tax side.
So that's
Right?
rising.
That is rising.
All right.
When you look at what does it comprise of, it is contrary to perception, it is not just salaried earners. It is all the sole proprietorship businesses which also come under personal tax. Now, why that is important is that as far as the salaried earners are concerned, there is TDS, it takes care of it. As far as the owned businesses are concerned, if that growth is encouraging for a variety of reasons, that gives a lot of leeway to the government, and that is why I think that confidence that they will meet the direct tax revenue target is coming because of greater compliance from this category of people who are now coming into
That's
the
an
tax
encouraging
net.
sign, in fact.
Absolutely.
A quick question on the other extreme, Ketan. I mean, we are referring to the Aam Aadmi and the salaried class, but what about the other extreme, the high net worth individuals, the super rich, so to say? Any case for their tax slabs?
But that
to
has
be
already
changed?
happened. You see that at 35 it is already too high, and I know we talked about corporate tax rate, but there is also a reduction of
But
tax rates.
maybe the rich have got richer.
That's true. That always happens everywhere in the world. In US also, as per some survey which was conducted, which is conducted each year, you have people, the rich has always become richer to that extent, but the number is still very few. At the same time, there is no point in disincentivizing them in such a way that people are encouraged, let's say for example, to become NRIs, which is happening actually. So I don't think that there is a case to go up to that level and disincentivize people, because there will be a drain of entrepreneurship, so to speak, also to that extent. And I think there is a case that including surcharge and cessions to bring it down to 30%.
Time now, gentlemen, for closing comments. I want to start with you, Sudhir, first. Quickly, in 30 seconds, your top 3 expectations from the government on the direct tax front in the budget.
See, what we could perhaps look forward to is a simplified or an alternate minimum tax.
All right.
Right, which just picks up the profits from the books without any adjustments for tax purposes for smaller businesses.
Okay.
That that speaks to the ease of doing business. That I think will speak to the buoyancy in tax revenues, because you just pick up the book profits, pay the minimum tax, pay it, shut it, forget it.
All right. 2 and
That
3?
I think would be my main this thing. Others we have discussed in terms of tweaking of corporate tax rates.
Okay.
And a possible relook at the dividend distribution tax mechanism.
All right. So that's your top 3. Ketan, your top 3?
I think the reduction in tax rates, whether it is DDT, as I said, should be converted into a withholding tax. A reduction in corporate tax, reduction in individual tax, reduction in tax rates even for LLP. So that's one, the tax rate basket.
That's that basket.
A couple of other things which actually we didn't speak about, and the second thing which I wanted to talk about was the need to make any type of restructuring tax neutral. So conversion of company into LLP, there are complexities in demerger definition. I know we didn't talk about that, but since you asked the 3.
No, absolutely. Let's
And the
address that.
third one is, everything to do with dispute prevention, as much as you can do so, coming out with, circulars and government positions, and dispute resolution, particularly within a time frame that is consistent with today's reality. You can't have an advance ruling, for example, for, pending for 5 years. So dispute prevention and dispute resolution would be my third box.
All right. So, gentlemen, thanks so much, Ketan as well as Sudhir, for taking out time and sharing some of your key expectations on the direct tax framework as far as the budget is concerned. Let's wait and watch to see how the Finance Minister delivers. On that note, it's a wrap on Budget 2018, the tax effect. Stay tuned to ET Now for more news and updates.